I'm going to start off with a macro view and sort of like from a big pictures filter down all the way to what are the areas and companies to invest in the year 2022. So the best way to look at the at the global economy is obviously taking cue from renowned publishers like The Economist, and they have actually published a 180 pages of this booklet called The World Ahead 2022. You can buy this book, or rather this report, from Amazon. I think it's $9.90, and you can read it for yourself. But if you do not want to read this book, these publications, I basically summarize these 180 pages into eight different headings, which I feel that it is relevant to us. All right, and then from these big directions, right, we sort of like be able to identify what are the trends, what are the changes, and how are things different, in 2022 compared to 2021. Okay, so this is what I'm going to do. So in The Economist, basically it's as I say, it's 180 pages. In fact, more than 180 pages of information, and I summarize it into eight points, eight headings for which is basically relevant to us. All right. So number one, first and foremost, is the e-commerce, ESG, and recycle. So what happened is that we know that when the pandemic started in early 2020, and it has been going around until today, e-commerce itself has grown at least 2 to 3 times compared to the year pre-COVID. Right? People shop online, people do everything online, so that basically is a huge growth of e-commerce without a doubt, right? So as a result of that, new companies, new e-commerce way of doing business has been sprouting in the year 2020 and 2021. And e-commerce are no longer a general, platform for you just to click and buy, but they becomes a special theme, for special purpose, special vehicle, or even special shopping behavior type of goods. They start to streamline from this point onwards. But nonetheless, all these has been growing exponentially. Now, the point here is about e-commerce, which is basically related to e-commerce, is the supply chain itself, right? So as you all may aware, in today's world, basically the supply chain has sort of like breakdown, right? Shipping is really expensive. Air freight is really, really expensive. The time to clear a customs, the time to clear the port has been extremely long, right? So this whole entire supply chain has already broke down, right? And how far can this supply chain be regained? We do not know. I mean, the economists are saying that it could be 6 months. Some say it could be a year. But nonetheless, all these is going to affect the e-commerce platform players. And as a result of that, this e-commerce platform, they are now using their own in-house supply chain management, right? Instead of relying on third party, now they start to use the supply chain, put things in their own hands and want to control this whole entire chain itself. So that is one part of it. The other part of it is going into autonomous vehicle to deliver goods. These are already been been implemented in some part of the country, some part of the areas, whereby they are experimenting using drones, autonomous vehicle, and different means to deliver products and services through technologies. Then, of course, the more important thing is that the biggest change is obviously the awareness that the people have in today's is ESG and recycle. So in the past, you know, we also get used of new stuff, right? You want to have a new clothes, you want to have a new bags, you want to have, you know, everything is being new. But given the fact that with this global warming and the ESG kind of policy change, people mentality will start to change, right? And as a result of that, e-commerce that is related to ESG and recycled goods will become one of the main trends. And this is already getting tractions already. So we are talking about companies like, for example, I'm going to show you over here. It's a company called TradeUp, right? This is a company which you have your unwanted goods. You can actually send it to them with a price. This company will basically go out there and repackage the products, you know, clean it up, do it nicely, put it on a website, and sell at not necessarily a cheaper price, but at a price whereby people feel that they are participating in this whole entire recycle thing. So it's a mentality change. And you all will probably read about Carousel. They are going for IPO as well. And they are basically more of a, you know, recycle goods as well. So the economist is predicting that this trend of e-commerce will continue to grow, and they continue to diversify going forward. And as you can see from this website itself, you know, it's very well done website, very high class, very trendy. You know, it's not like the Garanguni type of things. So these are one of those e-commerce trend that will be coming up, you know, in the coming years, right? So that is basically on the recycle part as well. And today the recycle business for e-commerce recycle business is already worth 26 billion US dollars, right? And that is the year for 2021. And this number was only 8 to 9 billion in the year 2019. So you can see that the transaction volumes and the transaction value has actually gone up over the 2-year periods. And that is where the trend will be coming. So e-commerce, in short, is continuing to grow. It continues to be diversified. It continues to move into very specific directions. And in the year 2022, we are seeing that e-commerce will going towards the recycle. All right. So that is number 1 point that the economist has predicted. Now, number 2 is about DeFi versus traditional finance systems. Now, I think a lot of people look at DeFi, then obviously they say, oh, it's about blockchain. Yes, it is about blockchain. And the world is basically changing. The world is basically changing. 2 years ago, we may be scratching our head and say, what is blockchain? You know, how is it going to affect our life? And you can see that during this COVID period, the 2 years period, the DeFi has grown so big that now they are challenging the traditional financial systems. So for those who still don't have the concept between the DeFi and the traditional financial systems, the later one is basically it is controlled by central government. All right, and obviously central government do not want to give away the power. Whereas DeFi is that everybody has an ownership of the financial systems, right? Everybody take the responsibility of that financial systems. So that is the biggest difference between the two. Now, when we talk about DeFi versus financial systems, the economist is foreseeing that there is going to be a two big school of what we call battle, you know, between these two. Which one will win, we do not know. But obviously, if you look past the history, technology itself may die off, you know, in some cases. But in most cases is that technology will win at the end of the day. So it's a question of how DeFi will take on, the challenge and moving forward and become more complex and become more, to have a whole entire ecosystem to support the whole entire DeFi. All right. So when we talk about DeFi, what do I mean? So we are talking about traditional banking. Anything that you can find in today's banking systems can be digitized, right? So we are talking about payment systems, we are talking about digital currencies, we're talking about cryptocurrencies, and all these fall under DeFi. Now, to give an idea what is cryptocurrency, today cryptocurrency in market cap, or in market cap alone, is 2.03 trillion US dollars, right? The whole entire crypto market cap is 2.03 trillion. And all this 2.03 trillion is nearly 90% liquid, meaning to say that there are transactions going in and out on a regular basis. Gold, commodities gold, all right? We always say that, well, gold is the best hedge of inflations and, reserve currency, gold backing currencies, that sort of stuff. Gold as a market cap, world reserve market cap is 11.56 trillion. So crypto is 2, gold is 11. But gold is illiquid. We estimate, the economist is estimating that gold itself, the liquidity is only 20% of that 11 trillion because it's all held by countries, right? Gold reserve and all this stuff. So it's only 20% that's basically is on the market itself, liquid. So that's whereby you go to goldsmith's shop, you buy your jewelries and all these things. This fall under the liquid. It's only 20%. So 20% of 11 trillion, that's probably about 2 trillion, slightly more than 2 trillion. So you can see that the gold liquidity and the crypto liquidity is almost the same right now. All right. And if anyone today are still saying that crypto is a scam, then I think we have to look at really, really fundamental and say that whether it's crypto or scam or not. Now, that says, the economists are not saying that, we should go up there and start to buy crypto. We just want to be, the economists are just saying that crypto is here to stay, all right? It is not going away. It is here to stay. That's it, all right? Not encouraging anybody to jump into the crypto at this point of time, but it is something which is liquid and is comparable to gold, right? So DeFi will also go into other things as well, because DeFi is a very, very big word. So the branch out of DeFi would be NFT, non-fungible tokens, digital asset, and DeFi will also apply into many other areas that you and I will be very familiar in today's financial systems, such as insurance, supply chain, healthcare, identity. All these fall under DeFi because NFT itself, the application is casting a very, very wide network, towards DeFi thing. So therefore, you can see that all these new technologies coming in with the blockchain technology evolving, a lot of these traditional financial systems, which they require a lot of manpower to maintain, will now move towards cloud and data and network. All right. So that is the biggest challenge, that the economist is saying that, in coming years, these are the things to watch out for. The third thing is about food scarcity. Because of the weather change, because of the natural disasters, the price, and of course, because of energy itself, the price of energy has actually increased so much. For those who have attended my CLP, you will know that I'm talking about natural gas, coal, all these, the price has been shooting up 2 to 3 times compared to last year. And this directly has affected the price of the food. And food, if you all have not noticed, food price has actually increased. Even in Singapore now, we really feel it. This is become an important issue, and it's not only us, but it is actually a global problem. So food scarcity would means that either food has to be resolved, or rather has to be solved by technology, like for example, man-made meat, new farming technologies, or anything that has related to food itself, or to increase the food productivities, will be an important part of the ecosystems. Or on the other hand, that any technologies that is related to controlling or maintaining or improve the environmental space, that will have been a very, very good place to look at as well, in terms of investment, in terms of technology progressions. So food scarcity is a 2022 important topic, right? Now, the fourth point is pandemic to endemic. So right now we are actually on the endemic. So we are going to live with this COVID, on a daily basis. Treat it as your friend. We just need to avoid, well, not treat it as a friend, but treat it with someone that you got to live with, even though you may not like that someone. So it's an endemic, and that would means quite a lot of things, right? It means that there's a lot to invest in vaccinations, a lot to invest in the healthcare systems. It is also talking about a lot of preventive measures, policy in place, administrations, and things like that. So anything that has been related to this pandemic, and in the past we have a weaker infrastructures, these are all need to be enforced. So this is one part of it. The other part that the economist is worried is about emerging economy versus developing countries and versus developed country. Now, if you have followed the news, you know that the pandemic is not being fair to everyone, all right? So the poorer countries don't get the vaccinations that as fast as they wanted it to be. Their healthcare systems are not as good as those developed countries. People don't get a full attention, medical attentions as they wish to get, in emerging countries, emerging economies. So all these will create a bigger social problems whereby the rich and the poor is widely being divided, all right? And this could cause a lot of conflicts, social problems between countries and between tribes, religions, or anything like that. That's basically economists is concerned about the change from pandemic to endemic itself. So that's one point that they highlighted, and I feel that this is important because how we want to invest in our money, where we want to invest, it really depends on how the COVID will develop by itself, right? Now, the fifth point is about hybrid working model. I think this one I don't really have to explain further. Even in today's world right now, as we speak, I don't get to see you in a class anymore. I'm conducting this talk through Zoom. Yes, I do like to have a small group discussion, but that actually, something that I can only wish for. It's not something that has been taken for granted in the past, right? So hybrid working models, that will also means the whole entire ecosystems as well. So we're talking about hot desks, we are talking about flexible time, we're talking about travel, we're talking about engagement, we are talking about meeting people in metaverse. We are talking about meeting people through Zoom, relying on such technologies, to work. The economists actually are more concerned is about the way that how people is being measured. If you are today an employed salary, in the past, when we all go to the same office to work, your bosses or your management may be looking at the progress, of how you get from point A to point B, the progressions of the work itself, that been seen. Once you change these hybrid models, that mentality could have changed. And instead of measured through the progressions, now you are being measured through productivities. So it's like what the management always say, don't tell me what you have done, tell me what you can produce, the end results, the bottom line counts, So that change in management process would also leads to a different kind of a working environment and the way that how software and hardware being developed around all these productivities, measurements, So hybrid working model is something that is still fairly new to all of us, although we think that we may already familiar with it, but trust me, this whole entire working models will continue to change. So for example, HR no longer known as HR, but they are called it human capital management. And now all these are being managed by software. And how does this software actually keep tracks of people on hybrid working models? These are the developments that we should be focusing on. And then at the same time, look at all these companies and see what are these are the can I request the person who mute the mic, please? Thank you. Yeah. So basically these are the areas whereby we would be able to look at and spot this opportunity, this growth company in terms of managing hybrid working models itself. All right. So go to point number 6 is about going to point number 6 is about leisure travel. So leisure travel is transforming due to this restrictive travel. So if we go back to pre-COVID days, travel means we will go to certain place, certain country, experience their hotel, experience their services, experience their wine and dines, take a pictures, put it on Facebook, post it on Instagram, post it on whatever social medias, and share your experience, with a circle of friends, right? So that's pretty much leisure travel. And pandemic time, at this point of time, and post-pandemic, all these leisure travel will, instead of travel 2 to 3 countries per trip, now you may only restrict to travel only one place, in fact, one region. And that basically force people to explore more into that space. So I will guess one of the easiest way to communicate this point is during the lockdown in Singapore, a lot of people has nowhere they can go to. So what they do is that they start to travel every corner of Singapore. Some even go to the extent of going to a restrictive land, state land, on the plot of Dover Forest. And then of course they end up with different troubles. But the point here is this, is that people, once they are being confined to only a very specific spot and they cannot go anything further, so they will just basically explore every inch of that place that they are going to visit. And this itself will actually form a different behavior. So instead of just take pictures, eat good food, experience, and that sort of thing, now people probably will want to read into details, the history, the understanding the culture, more on the different aspect of traveling because of the restrictive travel itself. So so I feel that this is really important as well, because I don't see how we can get back to pre 2020. And going forward for the next 3 to 5 years, I think that we will be still under this restrictive travel, and how people will travel will which of course are saying that these are transforming. Number 7, social media. So the social media company in today's world are gaining a lot of protests, from the user because of the data. So for your information, in terms of technologies, we are now at Web 2.0. So what does that mean? When we talk about Web 2.0, everything that we communicate through through technologies, like for example, in tonight's session, the Zoom is being recorded, on either on Emin's computer or is in Zoom cloud. That information basically is belong to the company, right? So your informations on Facebook, your pictures on Facebook, and all these things, it basically, the data and the behavior science, the data science, all these belongs to the social media companies. And of course, all these social media companies are using all this information to push you, advertisement, to sell products or services. So that's basically Web 2.0. We are transforming to a Web 3.0. And in between that, we would have what we call as internet security companies, which basically formed by a group of people who are against social media companies to use data to sell us information. To use our data to sell us information. All right. Now, then we move to Web 3.0. What does Web 3.0 means? Web 3.0 means that the data that we have, all right, belongs to us. We have the ownership. So for example, today, if I key in my my name and my IC number or my passport number, this data belongs to me. And if Meta or WhatsApp or Instagram want to use this information, all right, they will have to seek my permissions to use these data. All right. And we are seeing this more and more prominent. So if you are using the latest iOS software, and if you go to any of the apps, the moment you turn it on, they will actually prompt you a sign and say that, do you want the other party to track the information? And most likely is you're going to click no, right? So that's basically is a form of internet security companies trying to help you to block away this, not letting your informations given to the advertiser or the social media companies. And Web 3.0 basically use this ownership to monetize for you. So when you have this information, this personal information, and for example, if Meta, which is also known as Facebook, will comes to you and say, hey, I want to use this information, and you consent and say, yeah, you can use my information, but you got to pay me for money because you make money out of it, and I want to be part of that money-making process. So Web 3.0 allows you to do that, with taking back your ownership of your personal data. And this is still very, very far away, all right? In terms of technology, this is, I would say that this is probably 3 to 5 years away, right? It's definitely not going to happen in the year 2022. But technology is actually working towards Web 3.0 for that purpose. So, so you may just want to watch this space. Anything that has related, any companies that are related to personal data, securities, internet companies that in this space, these are the companies that they will grow very quickly and exponentially as well. And because more and more people now come to aware that these companies are making use of the data, especially the younger millennials, the younger people, they want to keep control of their stuff, especially if they post their pictures on Instagram and things like that. They want to have ownership of those information that they have posted. So this is one of the things that the economists has predict, right, going forward. So the last point is about asset bubbles. Now, I don't think we would, there's no argument about asset bubbles in today's world right now. Everything that we see, we touch is about bubble, right? You can talk about your COE, you can talk about your condos, your HDB, the price has gone so improportional versus the income, right? And everything you see is bubble. You go to a wine shop, you go and order a bottle of wine, and they're going to charge you something like 50, 60 bucks. If you go to a restaurant, they charge you 90 to 100 bucks. And you know that bottle of wine, if you buy in Australia, they will cost you about $4 to $5. So anything that you touch here today is bubbles. The economist is saying that get used to it. All right, bubble is here to stay. It's not going anywhere. The reason is because today's the bubble is created by the central bank itself, right? So if the central bank is actually blowing the bubbles, the central bank is not going to poke it and going to burst the bubble, right? Because central bank is the one who create all these, all these inflations and all these things of it. So a company with what we talk about in point 3 and point 3 about energy, food, transportations, all these price has been continuously going up. So right now, the oil per barrel, I believe, is now more than $80 per barrel already. So one tank of petrol these days easily is more than 100 bucks. Even you're driving a relatively mid-sized sedan. So they are here to stay, and better get used to it. So basically, this is what the economist has painted a picture for us in the year 2022 and beyond. And it is an interesting discussion because it sort of like covers every aspect of sector of the economies, minus the political part. Of course, the speculation itself will talk about politicians, but we are not interested in the politicians for discussion. We only focus on the technology and economy itself. Okay. So with that, few days later, in the year 2022, Business Time published an article. It's called Market Trend in 2022. So just now what we talk about is a global market, global trend, and Business Time will have its own version. Presumably, it is more for Singapore market, Singapore Business Time, right? So the sub-headline says, from manpower shortage to metaverse, there are key themes that could continue to have an outsized impact on market and economy in the coming year. So the first one, which is basically big on, really big on the page, is called Web 3.0. So that actually goes back to our point number 7 in the previous slides, Web 3.0. And Web 3.0 is all about data, right? Ownership of data, and how it can incorporate blockchain and this ownership of data and merge them together. And we are talking about different layers. I am not a technologist in terms of developers, but if any one of you who are in this network and IT space, maybe you all can go into different layers of Web3. But from a from a very big elevated view, Web 3.0 is definitely a combination of blockchain, personal data, and many things that incorporate into this whole entire network itself. And as I said, this is not going to happen in the year 2022. We're talking about progressively anything in full operation should be in a year, my predictions, right, in 3 to 5 years time. All right. You'll get to hear this more often as we progress. Now, the second one that Business Time has put up is called digitalization's rule. So, so Business Time is saying that this digital process, transforming process, is in fact we already know. In fact, from a few years ago, when we start to implement, cashless payment, this is actually part of the digitized process. When we do online classes, again, this is digitalization process as well. So, Business Time itself, they basically group everything of these digital transformations into this digitalizations. For me, I would like to emphasize more on two things, all right? When we measure digitalizations, we always look at number one, and I always like to repeat, even to the people that I interview, is that number one thing is that what is the existing problems? All right. Then second thing is that this digital transformation process, can it solve the digital process? Can it solve the current problems? Okay. If it can't, then how long does it take to solve the problems? And then, of course, the last one is how much it takes and how long it takes to solve the problems. All right. So focus on all these problems, all these four questions. Then you ask yourself, is there anybody who talk to you about digitization process? And you become a very clear pictures to you. It's like, okay, so what's the problem you're trying to solve? If you are trying to propose a digital transformation without solving a problems, then in the first place, why are you having this digitizations transformation? So I think I will just leave this point here because Business Time did not clearly specify what is digitizations, but rather I go through with you all, in terms of how I look at digitizations itself. Now, the smaller one that Business Time has actually put into a smaller, category. Number one is ESG. That basically goes back to economist point number one on recycling, ESG, climate change, that sort of things, and those along those lines. So again, this is going to be something that we would need to look at, or rather the world going to look at in the year 2020. Then the next one is inflation and interest rate. I think this one goes to you and me. Inflation is high now. Singapore inflation's, I think, I don't have the numbers with me, but in US, the inflation right now is 6.5 to 6.8%. It's really bad. It's really bad. So why I'm saying it's bad is because, let's say, supposing if you invest in Singapore REITs that give you 4.5 to 5% return per year, you think that you are happy with it. You go to US, you realize that you become poorer. All right. So inflation is not something that anyone can ignore. Right. So it is something that the Fed will need to solve it. It is something that the world government, the central bank will have to solve the problems. So it is something that we will need to watch for. So of course, the economist way of saying things is that, well, to fight the inflation rate, basically we just raise interest rate, right? Now how it works, that one I will leave it to the economists to talk about it. But assuming that if there is in fact, not say assuming, given the fact that right now the roadmap for interest rate to rise is 3 times this year, then obviously, the banks is going to benefit out of this, right? So interest rate is something that then you want to watch at, and also look at all the financial institute as well. The next one is supply chain recovery and diversifications. Is the first point I mentioned as well, is the e-commerce and the supply chain breakdown. So now the world know that global trade is no longer sound as good as it used to be a few years ago, right? You can see that how people have changed their behavior. So prior to Biden, during the Trump time, or in fact, just before Trump came to president, people talking about global trade, global supply chain, everything was looking fine, things like that. But in today's world, with this COVID breakdown, political change, political conflicts, trade war, suddenly all these supply chains break down. Factories start to move around, from China to Vietnam to Cambodia, moving back to US, back to UK, that sort of thing. So this whole entire supply chain has become very, very complex. And it no longer as simple as what things used to be in 5 years ago. And that's why you will require very specialized skill, software, and big data, in order to manage this whole entire supply chain. So personally, I see that there is a big change in this supply chain management, warehousing, and all these things. All this is going to be, use the business time word, is called digitized. All this is going to be digitized, compared to 3 to 4 years ago. Then the next one is COVID-19 treatment. I don't think I need to go into further with this. The next milestone for COVID medication is, pop in 2 pills in the morning after meal, 3 times a day, then you should be back to work. You should be okay, rest for 2 days, you should be back to work. So COVID development is going to be something like a COVID treatment is going to be something like a Panadol. When you have headache, you just pop in 2 pills and solve the problems. So that is for COVID treatment. Travel exemptions and vaccine passports. So I did talk about travel just now, restrictive travel. So business time, same thing. They talk about more on the software of controlling, right? So we're talking about vaccine passport, who are the people allowed to travel, who are the people not allowed to travel, how far can they travel, how extent they can travel, if they fall ill, what can they do, this sort of like the travel management system. It will be something, could be a new industry after all, because of all this restrictive travel, right? Manpower shortages is something I think the world is fighting right now, especially in US, because of the restrictive travel, because of the vaccine passport. People don't get to fly that often. People don't get to see people that often in physical. So manpower shortages, this is going to be a short-term problem, but it is going to be very real in 2022. And I believe, I'm not too sure about other countries, I inclined to believe that Singapore is in manpower shortages. US is definitely in the manpower shortages, all right, because American actually quit their jobs and they become a freelancer. The millennials are no longer happy with just working for companies. They want to have a different lifestyle. So America will have a different problems, but nonetheless, manpower shortages is something in the year 2022 Singapore will be facing. Hybrid working arrangement is something that I've just covered, so I don't have to go through that. And of course, property prices. So I'm not a property expert, but I can only summarize the fact that the cooling measures has very little impact on the prices of property. If I will go back to my previous slides, I talk about asset bubbles. They are here to stay. Same thing, the high price of your condominium, your HDB, your landed property, whatsoever, they are here to stay. If you're expecting 5 to 10% drop in price, that's not going to happen. I mean, I dare to say that it's not going to happen, although I'm not a property specialist, because it is there. I mean, it's just that prevent the price to go up further, that's all. Right? So this is basically what Business Time has carved it up. So going forward, what can we do here? All right, so we go back to numbers again. We go back to numbers. So understanding a big picture of the global, what Singapore is facing, what are the challenges, potential challenges that we are going to face. I sort of put together an S&P 500, which is basically quite a good indicator of the economy, because US market still represent, you know, a huge market cap, you know, compared to the rest of the stock market, right? So if we were going to look at today S&P 500, the average price to earning ratio based on the earning results, the PE is approximately about 18 times. That is what we call the fair value. As of December 25th, oh, sorry, December 23rd, all right, the PE for S&P 500 was 28.85, all right, 28.85. So significantly higher. That means to say that you are paying, if you buy into S&P 500 today, you are paying a premium over the PE of 18. All right. So that's how we make a relative comparison between these two numbers. End of 2021, the fair value for S&P 500 is supposed to be 4350, and the S&P 500 for end 2021 is 4780. So let me just quickly run through what's the S&P 500 now. Closing yesterday. Okay, so end of 2021 is 4780. As of last night, it closed at 4659. 4659. So it's still a premium over the fair value of 4350. All right. The earning per share growth for 2021 is 8.1%. The expected earnings per share growth for 2022 is 9%. If we will work it out with this 9% in place, the projected fair value for S&P 500 is 4780. So which means that the end 2021 numbers, which is also today's numbers, 4659, around this range, is basically the fair value for the year 2022, right? For the year 2022. So the economist is actually projecting that this year the S&P 500 will have a slower growth, and it will end up in between 4350 to 5200. Right, this is the projected numbers. Now, bear in mind, these numbers 4350, 5200 doesn't mean that it will only go within this range. This number we are talking about is the end results. End result. We are not talking about in between. S&P could have gone to 6,000 and then it fall back to 5,005, then fall back to 5,002, you know, that sort of things. We're talking about the end results of the end 2022. Or it could fall all the way down to 3,009 or 3,008, that kind of range, which is almost the same time just before the COVID hit. We were at, S&P was at about 3,008 to 3,009 range. So it could have that kind of swing, you know, within the year of 2022. But of course, the projections for S&P 500 in this case is 4350 to 5200. Now, so to look at this whole selection process of this S&P 500, the better way to look at things is to look across all sectors. You know, so there are 11 sectors in S&P 500. Just cover all sectors if you can. We expect S&P 500 to growth rate to become slower. So it's probably good to pick some low volatility stocks with high returns, probably more towards value stocks rather than growth stocks. And of course, we have to take note of the interest rate hike, which is expected to have 3 interest rate hikes this year. Then the month-to-month data to watch for is COVID-19, the supply chain what are the changes within all this supply chain? This shipping company price, freight charges continue to go up. Inflation is something that we really have to watch very closely right now, because we have come to a point whereby it's going to affect a lot of people, and indirectly that will also cause the rise in labor costs as well. Then have a 1 to 3 years of time horizon. So it's difficult to look beyond 5 now because of all these. I use my own words. The world is right now is pretty messy, so it's better to look at something which we have some visibility compared to anything beyond beyond our visibility, because anything that's beyond that one, you got to go to fortune teller. So we are not fortune teller, we just based on facts. Okay, sector to look at in for investment in the year 2020. Personally, this is my personal choice already. Based on all these going on in the rest of the world, I am inclined to invest in banks. So your DBS, your UOB, your OCBC should benefit from the rise of interest rate. If you want to go beyond, Singapore, then obviously you can look at some of the investment bank in US as well. Second one would be consumer discretionary. So anything on luxurious goods and anything that is like goods that's not the needs but the wants, right? And those are the things that you want to invest as well. Why do I say that? Is because as the rich and the poor get divided wider and wider, you will notice that people will tend to buy more luxurious goods. In fact, over the last 2 years, luxurious goods and watches has been growing on a very, very healthy growth. I can't remember the numbers I read, but I believe it is on the double-digit growth. All right. So people are getting richer. So anything that's consumer discretionary kind of companies, especially on luxurious goods, is something that worth to look at. E-commerce and its ecosystems, that will include those that, for example, the e-commerce platform that I just mentioned, the TradeRate, which is more on the recycle business. Etsy, e-commerce is basically on handicraft, very customized kind of e-commerce platform. And its ecosystems, we are talking about the supply chain management, whereby they take control of the delivery of goods and warehousing. So these are the players that I'll be looking at. Number 4 is payment. So e-commerce is related, and payment is basically very closely related. So what happens in today's market is that payment has expanded to 2 areas. One is crypto payment. The other one is buy now, pay later. I'm not too sure if anyone will follow my Facebook page. I did experience buy now, pay later services, and I will tell you from my first-hand experiment is that the user experience is extremely good. Extremely good. Of course, I forbid myself not to shop with buy now, pay later, because we will end up with a different set of problems if we start to build up our unnecessary expenses. But the buy now, pay later thing, like for example, the Amazon using Affirm, and some of the companies that has that's been expanded to UK and in US has been growing exponentially. So anything on payment will be something that you'll want to look at. Number 5 is metaverse and semiconductors. So metaverse is what Facebook has sort of like, announced to the world that they are going to metaverse world. It's a new form of social medias. That also means it's a new form of advertising, a new world, a new way of people get together and socialize, a community. it is a really big thing. I can't explain metaverse in one simple sentence, but let's say for those who are not familiar with metaverse, just think that you are now living in another virtual world, you know, whereby you can live the way that you want your life to be. So for example, for me, I'm dreaming, you know, to be able to influence millions of people as a speaker. Then I can't do it in real life because I don't have that many followers in my social media space. But when I go to metaverse, I can be that person, you know, to do the things I want it to be. So this is only one small part of a metaverse. But this is also the area whereby it's going to grow exponentially. So metaverse itself is more on the software. The hardware is, of course, the semiconductors and the AI that power the metaverse space. So anything got to do with semiconductors that power the metaverse will be something that I will be closely watching as well, especially the AI, the graphics card, and things like that. So these are the companies I'll be looking at. Number 6 is crypto exchanges. So right now, we know that we have Binance, we have Gemini, we have KuCoins, we have Ku, we have FTX, we have Huobi. You know, we have so many exchanges right now, but they all do different things in the crypto space. So right now, it is still messy. It is still messy, but crypto exchanges are improving so that they can do a lot of things like what Kim Eng, Poems, or your Tiger or your Momo is doing as well. And they can get, you know, really, really complex in terms of lending, borrowing, giving you interest, yield farming, you know, proof of stake, proof of work, all that stuff, you know. So these exchanges has a very, very high trading value, right? That's so because of the crypto prices as well. And remember, just now I talked about the 2 trillion market shares, right? So this kind of a 2 trillion market cap, all right, market cap in liquidity. So that means to say that every day you are looking at this kind of money is being transacted through all these exchanges. So you can imagine, you know, all these exchanges, how much money they can make. So like, for example, Binance, the owner of Binance is a China guy. Can't remember his name. He decided to set his headquarters in Dubai. And, you know, he's worth billions of dollars, right? So crypto exchanges are something that we will want to look at. The clearing bank towards crypto exchanges, like for example, Silvergate, you know, these kind of companies, they are important as well to these crypto exchanges. The next one is fairly new, P2E. It's called, it means a play to earn. So we are talking about a metaverse space whereby you can set up your characters, you can play a game, and when you play a game, you actually earn money. And there's a lot of millennials are actually making money through playing games, right? Sound ridiculous, but it is true, all right? And they are making good money as well by creating characters, creating NFT, creating stuff, right? And of course, by creating all these things, they will attract sponsor. And guess who are the sponsors? Advertiser, right? So you have Coca-Cola, Nike, you know, your whiskey, and all these, you know, becomes part of their sponsor. And if you know how to create, if you know how to play the game, if you know how to create the character, if you know how to buy the add-ons, you know how to create the NFT, and all these advertiser will come to you. So it's a new form of influencer. So influencer go up there and, you know, selfie themselves, you know, put their pictures onto their Instagram to attract followers, and then eventually we become influencers. So same thing in the P2E space, and we're talking about huge money. We're talking about millions of dollars over here, right? So P2E is a new space in the metaverse. It's something that we would want to pay attention as well because it's huge and it's related to metaverse and semiconductors. And of course, not to talk about NFT. I'm not too sure if any of you has attended my NFT, very short presentation, but that NFT itself has so much applications in today's world. So it's just more than art pieces and music, right? Number 7, of course, is electric vehicle. I don't have to explain that further. Electric vehicle is definitely going to replace ICE. So going forward, in fact, in Singapore by 2035, there wouldn't be any importation of ICE anymore. It is all EV, right? So these are the sectors that we will be, that personally I'll be focusing at in the year 2022, and to see what are the changes have made over the years.